CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Is creating more jobs than any other economy in the world is because we are the strongest economy in the world. And that is because we are the most innovative economy in the world. We are the most decentralized and distributed economy in the world. And those are things that command and control destroys. Command and control national government strategies tend to be not innovative, and they don't distribute and decentralize so that you can experiment and progress. So let's remember why we are such a strong economy and not, kill the golden goose here coming out of a pandemic. So far, I'm not in a panic over that, but I do get worried when I hear all of government will be applied to supply chain issues.
Carly, thank you so much for being with us today and for staying with us through that briefing of the White House. That's Carly Fiorina. She is founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. Great to talk with you, Carly. And now it's my great privilege and pleasure to turn this over to my successor here today. That is, of course, Carol Masser, who's going to be the anchor of Bloomberg Business Week. Carol, all yours.
Passing the Friday baton.
Yeah, there you have it.
It's my favorite one.
In secure hands with you, Carol.
Thank you, as it was with you, David. Thank you so much. All right, folks, we have quite a Friday planned for you here in our Bloomberg Interactive Broker Studio. We're going to talk about jobs. We're hearing it may be the Goldilocks report that investors were looking for, so we'll get to that. Also, the People's Stock. We're talking about AMC. We're going to talk about the Bloomberg Big Take on China's big bet against the United States and beating the U.S. as a result. And then we've got the life and death of a pair of blue jeans. Yep, we're going to spell it all out for you. All right, let's get you going, though, on this Friday with a check on that trading day. Let's start things off with Charlie Pellet.
All right, happy Friday to you. Best level of the day right now on the S&P. You mentioned AMC stock down today, falling by 3%. Equities, though, higher. S&P within striking distance of a record after that pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages added to inflation worries. S&P right now up 34, a gain of 0.8%. The Dow up 152, up 0.4. NASDAQ up 203, now up 1.5%. The NASDAQ 100 index full of tech stocks up 1.8%. Russell 2000 up by 0.4%. 10-year yield 1.56%. Gold up 1.1%, $18.90 the ounce. And West Texas Intermediate crude up 1%, $69.52 a barrel. Donald Trump will remain suspended from Facebook's networks for at least 2 years, and the world's largest social media company says the former American president will be reinstated in 2023 only if the risk to public safety has subsided. Today, Facebook shares up 1.4%. I'm Charlie Pellet. That, Carol, is a Bloomberg Business Flash.
It is indeed. All right, we're set up with the markets. And as Charlie mentioned, equities pretty much hovering near their highs of the session. As I said, could be the Goldilocks report that investors were looking for. Let's see what Dave Wilson has to say, stocks editor at Bloomberg News, Bloomberg Interactive Brokers Studio. He's going to set the market drivers report. Along with Vince Signorella, global macro strategist at Bloomberg News, on the phone from White Plains. Dave, let's kick it off with you. I mean, it does feel like it was good, but not as good as the forecast when it came to jobs. And so everybody can kind of relax a little bit about things heating up, maybe.
Maybe. I mean, that said, you know, when you look through the 11 main industry groups in the S&P 500, it's not exactly like you're getting an affirmation, you know, about what's ahead for the economy, because you know, we got 3 of the 11 groups down: financial stocks, utilities, and real estate. Of course, you know, utilities and real estate are all about interest rates, and, you know, so is finance to some extent.
Because the bond market was kind of down, right? I mean, bonds were up, yields were down, prices were up.
And really, in terms of what's leading the way here, it's the big tech groups in one way or another, whether you're talking information technology specifically, or you're looking at communication services with Google's owner, Alphabet, and Facebook. Right. Facebook, by the way, up 1.5%, even though the European Union began a formal antitrust investigation.
Those things take forever. Vince Signorella, come on in on this, too. You shared with me a story. We know any kind of legal action or regulatory can take some time. How did you see the jobs report? What was going on in terms of what you were hearing from traders as a result?
Well, I mean, it was actually, you know, think about it, it was the second disappointment in a row. This time, the disappointment was to the downside. And, you know, it was kind of built in, really. You know, we did a story about this on the blog, or I did about an hour before, that it was kind of setting up for a bad number, in the sense that the whisper number was really high compared to even the higher estimates.
Did we not learn from last time's report?
I just think the BLS is having trouble getting all of this data together, given the stimulus, given what the people who are unemployed, given the under-unemployed, the U6 data, people who are in theory staying out because of stimulus, people staying out because they can't get the child care to get back to work. So I think in a month or two we're going to get some revisions that'll clear this up. But I think the most important thing that came out of that jobs report was the spike in wage inflation. And the thing about wage inflation is, unlike transitory inflation that the Fed likes to keep touting, which are food and energy prices,
right?
I don't know about most people, but if I get a raise, I don't give it back when prices go down.
Well, that's a good point. And there was an interesting conversation I heard earlier on Bloomberg TV and radio. And Dave, come on in on this, because maybe this is where we look back at what we heard in the last round of quarterly earnings. My understanding is that margin growth, we've seen some significant margin growth among companies, and that they can kind of swallow some of those higher wages without automatically passing it off to customers to pay higher costs.
Yeah, that's certainly true. I mean, you look at profit margins, we've seen some of the highest ones in decades, you know, just within the past couple of years. Sure, there's room to absorb cost increases, but that only goes so far, and still your profit margins are going to come down. That's not the sort of thing investors necessarily want to see. I mean, it all comes down to, can companies pass along their cost increases, not whether they're willing to accept the higher expenses. But, you know, putting it all together, I mean, it's sort of a back and forth kind of situation here.
Vince, does it matter that some of the wage gains were at the lower end of the wage scale, if you will, some of those hospitality jobs and so on?
No, because I think those are the wages that are going to drive everything, right? I mean, if you're seeing people, we've seen this happening in the UK right now. Restaurants have cut back servings and because they can't get people to come back to work. So those lower wage gains, you think about it, are going to be driving spending. They're going to be driving higher prices. They're going to be, if you're a manager of somebody who just, say you're a manager and you're making, I don't know, $30, $40 an hour, and all of a sudden the people who work for you, their pay scale doubles because the minimum wage doubles. Well, you're going to want to raise too. And everybody up the food chain is going to want to raise. I hope Mike is listening.
But are we being stupid in that this whole idea if you're making more money, you're going to spend more money? I mean, I know that philosophy doesn't always work, Dave.
No, it doesn't. And, really, it comes down to, when you look ahead, I mean, there's a lot of optimism in terms of earnings growth for companies, especially when you look at, say, the second quarter. How does that play out if indeed costs are going up and companies either decide they don't want to pass along those increases or aren't in a position to do it? I mean, that's the sort of issue looking ahead you really have to focus on, given what may happen with inflation here.
Hey, Vince, saved you 30 seconds here. Quickly, what are investors and traders focusing on right now?
Well, I think, like you said earlier, they are liking this Goldilocks story. I don't think it's going to last. I think we just keep looking forward to sentiment indicators. Sentiment indicators are what really drive inflation. The psychological idea that prices are going to go up in the future. And if going forward, as we get into June and we'll watch sentiment indexes, and if the consumer thinks prices are going up, they will go up.
All right, guys. Have a good weekend, Vince. Dave, we're going to talk to you later with your chart of the day. Vince Signorella, global macro strategist here at Bloomberg. Dave, of course, our stocks editor at Bloomberg News. Let's do the bite of the day. It is brought to you by, the Bloomberg Business Week Bite of the Day. One number that tells us a lot. It is brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, 3/4. It's a fraction. Almost 3/4 of the western U.S. is gripped by drought so severe it is off the charts if anything recorded in the 20-year history of the U.S. Drought Monitor. Mountains have seen little precipitation, robbing reservoirs of snow melt and rain. The wildfire threat is high, and farmers are struggling to irrigate crops. And we've kind of seen this play out certainly on the West Coast and in California. So we're hoping that this situation clears up sooner rather than later. All right, let's get a check on world and national news. For that, it's over to Nancy Lyons. She's in our D.C. newsroom in the nation's capital. Hi, Nance.
Hey, Carol. Former White House counsel Don McGahn has been answering questions from lawmakers behind closed doors. Democrats on the House Judiciary Committee want to know about the investigation into Russian interference in the 2016 election and whether former President Trump tried to head it off. McGahn's appearance marks the end of a 2-year legal standoff over his testimony. A transcript will be released within 7 days. Well, former President Trump says he will be returning to the stage this month, holding rallies and engaging supporters, but some GOP leaders are worried.
The former president has a primary objective with these rallies: to get revenge against other Republicans who turned on him. He plans to back their challengers in the 2022 primaries. GOP leaders are afraid another round of grievances about the 2020 election and putting untested candidates on the midterm ballot could hurt the party more than it helps. And the rallies will likely begin later this month. Meanwhile, former President Trump will be the keynote speaker tomorrow at the Republican Party's convention in North Carolina. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is holding another infrastructure meeting this afternoon with Republican Senator Shelley Moore Capito. Even if both sides do reach a deal, Bloomberg Government's Emily Wilkins says it could take a while to be implemented due to supply and manpower shortages.
We're talking about the steel industry, about sawmills, and even the worker shortage. I mean, just among workers alone, we're seeing companies having a really difficult time finding people and getting them back to work.
Wilkins says Biden has already offered tax concessions in those negotiations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, thank you very much. Nancy Lyons there in D.C. Joining me right now in New York is Charlie Pellet of Bloomberg News. Charlie, a couple stories on the Bloomberg. It has to be about people getting out to get the vaccine, and basically we're bribing those to do so. And then it's also about getting back to work, especially in the financial sector. Carlyle and Warburg Pincus telling employees that they're going to require COVID-19 vaccinations to return to the office in September.
Indeed, employers may demand vaccines and request proof under federal law. This according to guidance provided last week by the Equal Employment Opportunity Commission. Workers can ask for exceptions for religious or medical reasons. Most companies, though, have opted to encourage rather than demand that staff get vaccines. It puts employers in a very difficult position.
Well, and again, what we're hearing about Carlyle and Warburg Pincus is according to those familiar with the plans. But a Carlyle spokeswoman confirming the information was announced last week at a town hall meeting. Warburg declining to comment. Warburg, though, did tell employees that accommodations can be made for those who don't get the shots, according to a person familiar with internal communications. Carlyle, for its part, Charlie, saying at its town hall that getting the vaccine was not a condition, though, for remaining employed.
All right, how about buying those employees some beer?
Count us in. So President Biden's announcement last week that Anheuser-Busch InBev would give away beer was the latest bid to really bribe those Americans kind of sitting on the fence when it comes to getting vaccinated. Other public officials have dangled empanadas, guns, and even cold, hard cash. What's your price?
Thank you very much.
I know you're done already, but what would be your price? Everybody has a price.
It does, and I'm pretty easy with these things. But here's the deal: it's like, does it really take a bribe? Does it really take? I mean, your health is in question. Your health of everybody you know is in question. Why wouldn't you get the shot? Why do you have to resort to a bribe to get people to do this?
What it says to me is that people aren't really opposed to getting the shot. It's just name your price. Like, what does it take to? I should say, vaccinations surged in the past month among the young people typically targeted by the campaigns. About 44% of 18 to 24-year-olds have now received at least one shot, and that's up from a month earlier. All right, Charlie, thank you so much.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Level of the day right now. Stocks trading near a record after this morning's hiring data. S&P up 35, up 0.8%. We've got the Dow up 152, up 0.4. Nasdaq up 200, up 1.5% again. The S&P right now, best level of the day at 42.27 on that index. The record for the Dow, for the S&P, by the way, 42.32. 10-year yield right now 1.55%. Gold is up 1.1%, 18.90 the ounce. West Texas Intermediate crude up 1%, 69.47 a barrel. Nasdaq 100 index climbing toward a one-month high, driven by gains in mega caps, including Microsoft and Apple. Right now, Microsoft is up 2.2%. Apple shares up by 1.8%. I'm Charlie Pellecat. This is a Bloomberg Business Flash.
All right, Charlie, thank you very much. You are listening to Bloomberg Business Week, and getting to the other side of the pandemic, we know not a straight line. Reminded once again of that. On the plus side, we heard that new coronavirus cases dropped 95% in New York City since the vaccine was rolled out. And then on the negative side, COVID-19 infections are rising across much of the UK, so putting a lot of pressure on the Prime Minister there, Boris Johnson, as he weighs whether to delay plans to unlock the economy later on this month. So joining us, as he does every week, Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, and he's back with us on the phone in New York. Ian, nice to have you back with us. How are you?
Thanks, Carol. Doing very well. Happy Friday. Hope all is well with you guys over at the studio.
Yeah, we're doing well, and it does feel like things are, getting increasingly back to quote unquote normal as more people come back to work. The city, masks, taking off. How is it on your end in and around the hospital?
We're really seeing a dramatic decline, exactly as the numbers show. The incidence in New York has really dropped below, 1%, like 0.75% in that range. There are really literally a handful or less of COVID patients in the hospital. So we are still seeing COVID cases, much less. There are still some hospitalizations, but a dramatic improvement from a year ago. And I think part of that is due to widespread vaccinations, as well as some herd immunity from people who've had the disease itself. So I think overall the Northeast is doing better. New York is doing well. And I think nationally we're seeing a big drop. In cases, obviously, there are still some holdouts and vaccine hesitancy, which we do need to address, and people are trying to address with, lotteries and raffles and $1 million giveaways. I'm not quite sure that's the message we want to send, considering the rest of the world, is really desperately in need of vaccines, but, that's what's happening.
Well, and, we had an interesting story on the Bloomberg. It was one of our big takes, and it just says how, as COVID-19 cases in the U.S. and Europe drop and vaccines become more plentiful there, the COVAX program to boost inoculations in poor countries is still kind of scrounging around for doses. And basically, the bottom line on this is that the pandemic is global, and then the solution has to be global, that until we really eradicate it from most of the world, we're still all facing a pandemic and possible risks.
100%. And that may be why we're seeing a slight uptick in the UK. It's hard to know. They've vaccinated about 75% of their adult population with one vaccine. Mm-hmm. They're working on their second vaccine. But they also seem to have a fair amount of the Indian, variant, that triple mutant, the hybrid mutant. And so that is a concern. And I think that is a message that we really do need to get global vaccines, or we do risk more replication of the virus, higher risk of mutations. So far, it appears that most of the mutations are blocked by the current vaccines, but there is always a risk as it mutates where the vaccines will be less effective, and that would be very unfortunate.
What are the conversations that you guys have around kind of what's next? I mean, is it 100% that we'll have another virus that's going to impact us like coronavirus, COVID-19 did?
I think pandemics occur. Obviously in 1918, it was influenza, H1N1. There was no talk of lab leaks or genetically engineered viruses, but, there's always a risk with, research labs and animal to human transmission or research in labs, there's always a risk of problems arising. So we're certainly not out of the woods. But I do think the mRNA vaccine, that rapid response is great to be able to develop it quickly. We were very lucky that these vaccines happened to work against the spike protein. That would have been a very bad situation if you develop antibodies, and that wasn't the key way to block the virus. So we were really lucky this time. We need to learn more about sort of this process. And also, we're still a long way from getting the world vaccinated due to poor countries. And there's really a question, should we be enticing people with vaccines and spending money when really the rest of the world desperately needs vaccines?
Right. It does wonder. Well, you're right. There's a lot of things being written right now about, we're such in a push in the developed world to just get everybody, including kids and so on and so forth, vaccinated, whether or not we needed to kind of spread the wealth when it comes to vaccines and really get to some of the more at-risk populations globally before kind of getting to those maybe not as at risk in the developed world. But I guess it's a hard thing to manage.
Yeah, no, I'm glad we're having the discussion. I do think that once we've been reach herd immunity here, any excess should definitely be distributed to the rest of the world and make an effort for problem zones. We do have a little bit of a lead time to get those out. Right. I think we've made good progress. We need to figure out positive ways to incentivize the vaccine holdouts. I'm not sure offering them money or free beer is exactly the right way to do it, but it's one approach.
Who'd have thunk? Hey, just got about 30 seconds left here. How busy are your offices of people just coming in for routine things? I've been trying to schedule some things, and they're like, listen, I can't give you an appointment for 6 or 8 weeks because everybody's coming back.
Yes, so that's the good news, is that people are coming back for screening, skin cancer screening, colonoscopy for colon cancer screening, prostate cholesterol screening. There's been a big surge. The offices are really very full, and I think that that's a good sign that people are getting back to health maintenance, which is important. You don't want to miss other abnormalities. There's been a delay in diagnosing of many cancers and other issues because of COVID. Hopefully we're going to catch up with that.
Right, and delays can make a difference in the outcomes. Hey, thank you so much. Dr. Ian Lustbader, have a great weekend. Clinical professor of medicine at NYU Langone Medical Center, joining us on the phone in New York City. You are listening to Bloomberg Business Week. Coming up, we're going to talk a little bit about the Bloomberg Big Take. It has to do with solar and the U.S. and China. That's coming up on Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so depending on the day, depending on the policy, tensions between the U.S. and China can be kind of high. A lot of it has to do with competing in different markets. But when it comes to solar, no doubt about it, China has become the solar champion. We're going to get into the Bloomberg Big Take in just a moment. In the meantime, let's get to some of the big stories on the Bloomberg Terminal on this Friday. Hey, Charlie Pellet.
Well, hello there. We're very close to a record on the S&P. 4230 right now. The record there, 4232. Stocks pushing higher. S&P right now, best level of the day. Stocks are advancing after a pickup in hiring last month, bolstered confidence in the economy, while a strong rise in hourly wages added to inflation worries. Information technology stocks rising the most in the S&P 500. Right now, the S&P is up 37, a gain of 0.9%. Again, best level of the day. Year to date now, the S&P up 12.6%. The Dow up 170, up 0.5. NASDAQ up 202, up 1.5%. NASDAQ 100 index up now by 1.9%. 10-year yield 1.55%. Gold is up 1.1%, 18.91 the ounce. And West Texas Intermediate crude up 1%, 69.51 now for a barrel of WTI. The UK has approved Pfizer and BioNTech COVID-19 vaccine for use in 12 to 15-year-olds as a number of countries move to inoculate children in a bid to end the pandemic. Here in the U.S., Los Angeles plans to shut 4 large vaccination sites, including the Forum, a popular sports and concert venue, and shift appointments to nearby locations. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He told us he is concerned about the slowing pace of vaccinations.
I think that we've slowed a lot in the past month to 2 months. We saw a massive surge. We got to 50% of the population getting vaccinated in an incredibly fast rate. We got our kids vaccinated when that became available at a very fast rate, but now we're seeing us settle into a level that personally I find underwhelming.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer up 0.6%. BioNTech ADRs there surging 7.4%. ADRs of AstraZeneca up 0.8%. Moderna out of Cambridge, Massachusetts up 5.9%. J&J Johnson & Johnson up 0.2%. Recapping, we have got the S&P within a whisker of a record, up now by 0.9%. I'm Charlie Pellet. This is Bloomberg Business Flash.
It is so close. All right, Charlie Pellet, thanks for the update. This is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
It is time for the Bloomberg Big Take. It's the Bloomberg exclusive that is also among our most read stories on the Bloomberg today. It's a story you've got to know about how China beat the U.S. to become the world's undisputed solar champion. It gets to the heart of how we got here, and that's what the story digs into. Let's get more from Bloomberg News energy and environmental policy reporter Jennifer Deloy. She is with us on the phone in Washington, D.C. Jen, good to have you here with us. So this story just lays it out, because I feel like we often do a solar story and we're like, China wins, China wins. This gets into how it got there. So tell us how China just got so much ahead of the United States, because the U.S. certainly put policies in place to be a leader.
Right. I mean, U.S. politicians and presidents talked a good game about growing a domestic solar energy industry, and they did put in some supportive policies. But when it came to solar panel manufacturing, they really forfeited the fight. You know, China made dominating the solar supply chain a huge priority, and used almost every tool at its disposal to nurture their domestic solar manufacturing sector. So we're talking generous subsidies, cheap land, mandated demand. The factories also could benefit from cheap coal-fired power. And they were able to take advantage of that, these Chinese factories, as they improved efficiency and reduced costs, making their products more competitive against what was coming out of the U.S. And by contrast, the U.S. really just dabbled in this area. There were short-lived policy incentives and punishing trade barriers, but not the kind of big, sustained federal support that China was using or that arguably is really needed to win a new industry like this.
And it worked. And your story includes all the data points that point to it. Chinese firms now supply of the world's solar panels. U.S. companies 20 years ago made 22% of them, now produce just 1% on American soil. It's just fascinating. And you point out in your story, Jen, that it was China creating supply as well as demand. They covered both ends.
Right, absolutely. And what's interesting about that is that the U.S. has really focused on the demand side of the equation. I mean, one upside of cheap imported solar panels for the U.S. is that it has helped propel the deployment of solar power. And, in my reporting, I talked with countless analysts and folks in the field who basically felt that's where the federal government's focus was really on. The U.S. really liked those cheap panels and how it helped us get on track toward achieving some of our renewable power goals. So, now the U.S. has nearly 100 gigawatts of solar power capacity built out, and there are big solar jobs in the U.S. They're just not in manufacturing.
So we helped with the demand supply, that equation, right, in a big way. Well, what about, we've done so much reporting on cheaper labor in China. What else beyond, or was it really government policy just saying we're on an initiative? And really President Xi, right, who is looking to, and we know in a much bigger, broader way, become a manufacturing superpower. That's where he was, I guess, at that point. Now he's looking to kind of evolve some of those more sophisticated industry, but he was really on a mission.
No question about it. A bit of a surprise, perhaps to some analysts, to some degree, discounted the impact of cheap labor on this and really pointed to some other input costs like cheap power from coal plants in driving this. But of course, the incentives as well.
Hey, listen, just got 30 seconds really quickly. Can the U.S. turn things around? Can they catch up?
Maybe not on solar. There are opportunities for innovation, but what I kept hearing folks talk about is we can corner the next market. We can really push hard on EVs. That's the next big opportunity for the U.S.
Right, but we know China's going big on that as well. Hey, Jen, great story. Thank you so much. Jen Delowy, she's energy and environmental policy reporter at Bloomberg News, on the phone from Washington, D.C. Again, it's the Bloomberg Big Take story about how China beat the United States to become the world's undisputed solar champion. It just goes step by step in terms of policies, what China did, as you just heard from Jen, but also from the United States. And she talked about really the advantage of China attacking it both on a supply and demand angle, and that really gave them a big advantage. All right, let's get back to world and national news. For that, over to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. President Biden is taking an optimistic view of today's jobs report, showing the U.S. economy created 559,000 jobs in May. That was below estimates, but better than April's number.
Unemployment filings are down. Hunger is down. And vaccinations are up. Jobs are up. Wages are up. Manufacturing is up. Growth is up. People gaining health care coverage is up, and small business confidence is up. America is finally on the move again.
Biden says no other major economy in the world is growing as fast as ours. Republicans, though, say the numbers fall short of expectations and are a sign that extended federal jobless benefits are preventing people from returning to work. The recent ransomware attacks on a gas pipeline and meatpacking company are posing new challenges for law enforcement. And FBI Director Christopher Wray says going after those responsible is a lot like fighting terrorists after 9/11.
In an interview with Dow Jones, Wray says the Bureau is actively investigating about 100 different types of ransomware, many of which trace back to Russia. He says each of those 100 pieces of software is responsible for multiple ransomware attacks in the U.S. Wray says there's a shared responsibility to confront the issue, not just across government agencies, but across the private sector and even the average American. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former President Donald Trump will remain suspended from Facebook's network for at least 2 years. The world's largest social media company says Trump will be reinstated in 2023 only if the risk to public safety has subsided. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Joining me once again is Charlie Pellet of Bloomberg News. I'm Carol Massar in our Interactive Brokers studio. Hey, Charlie, Nancy mentioned this story, and the headline crossed about 12:30 Wall Street time today. It has to do with Facebook, saying that it suspended former President Donald Trump for 2 years, so extending its suspension of the former president from its social network for that amount of time, saying he will be reinstated in 2023 only if the risk to public safety has subsided. That, to me, gives Facebook a lot of bandwidth.
Indeed, and word coming from Nick Clegg, Facebook's Vice President of Global Affairs, who I might add served as Deputy Prime Minister of the United Kingdom from 2010 to 2015. In a statement, Clegg said, quote, "Given the gravity of the circumstances that led to Mr. Trump's suspension, we believe his actions constituted a severe violation of our rules, which merit the highest penalty available under the new enforcement protocols."
Yeah, and what's interesting is this is part of, I guess it's Independent Content Oversight Board, a group of outside lawyers, journalists, and experts convened to weigh in on the most challenging content moderation question. So they did bring in a bunch of outside folks to kind of look at this situation. We should point out, too, Donald Trump, the former president, the 45th president of the United States, did respond and put out a statement saying Facebook's ruling is an insult to the record-setting 75 million people, plus many others, who voted for us in the 2020 rigged presidential election. Again, the former president's words. They shouldn't be allowed to get away with this censoring and silencing, and ultimately we will win. Our country can't take this abuse anymore.
And you mentioned the election, and important to point out that 2-year timeline for reconsidering his ability to post means he could be back on Facebook and Instagram just as the 2024 presidential election cycle is beginning, and the former president has hinted that he's seriously considering a second run for the presidency in 2024.
Well, get ready, everybody. Facebook also saying that it will not treat politician content differently for news value. So, again, looking at what's on its platform. Charlie, thanks so much. You're listening to Bloomberg Business Week. I'm Carol Massar. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
S&P right now at 4230, 4232.60 would be the record on the S&P. Up right now by 0.9%, holding very close to session highs. The S&P advancing by 37 points. Stocks are gaining after a pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages adds to inflation worries. The Dow up 173, up 0.5%. NASDAQ up 202, up 1.5%. NASDAQ 100 index outperforming, up 1.9%. Russell 2000 up by 0.2%. Dow Transports on the minus side, down by 0.6%. 10-year yield 1.55%. We've got gold up 1.1%, $18.91 the ounce. West Texas Intermediate crude up 1%, $69.52 a barrel. Checking some of the so-called meme stocks. GameStop down today by 2.7%. AMC, a stock we'll be talking about in just a moment. AMC shares down now by 2.7%. I'm Charlie Pellet. That's the Bloomberg Business Flash.
That's right. Not all meme stocks are the same, Charlie Pellet. All right. Well, day doesn't seem to go by without us talking about the meme stock of the day, from Hertz to GameStop to AMC, which has been all on our minds the last week and a half, 2 weeks or so. Great story in the upcoming issue of Bloomberg Business Week magazine. It's about how AMC became the people's stock by not being a GameStop remake. Let's get more on this story. Bloomberg News high-yield distressed debt and bankruptcy reporter Kat Doherty on the phone from Boston, along with Bloomberg Business Week editor Joel Weber on the access line in Brooklyn. Not all meme stocks are the same, Joel.
Yeah, and there's one that's been just totally on fire, obviously, this week, and that's AMC. And when we were thinking about what an interesting take on it would be, Kat and her co-author Brandon Kuchkoden kind of hit on something that I thought was particularly interesting, which is actually it's almost like AMC learned from GameStop in real time from earlier this year and was able to sort of have a slightly different response that might make a world of difference for them. So Kat, talk to us about that. What's different about this meme stock than the mania that we saw earlier this year?
So there's two main differences that we point out in our piece. The first is the company AMC leaning into the enthusiasm from all of its investors and from the Reddit crowd that is out there and making trends on Twitter and hashtags AMC Army. They're communicating directly with those people, and they're offering perks like free large popcorns in a movie when you sign up and you are an investor with AMC. We saw the exact opposite with GameStop when its shares were surging and it was trending online and on social media. Management didn't acknowledge or communicate with that crowd in the same way. Now, what AMC has done is it's taken that enthusiasm and it's issued new shares this week. And every time that it's doing that, sure, it's diluting the existing shareholders, but for everyone involved, for all shareholders and debt holders, that means more cash on the balance sheet. And this is a company that has deferred rent payments coming due. They do have very high coupon payments on their debt. So when the interest payments are coming, they need cash to pay that. And so every time that they have announced these equity sales or issuing new shares, that is just more cash that the company can use and prosper into the future.
Yeah, and it's interesting. First of all, I can't imagine like a company going to a big institutional investor or pension fund saying, hey, we're going to throw some popcorn your way or something. Like, it just wouldn't work. But it's different, this kind of retail investor militia, Kat, that's out there. And it is interesting to see the CEO kind of playing to them directly.
Exactly. We, in our story, referenced this TikTok video that I think captures this sentiment perfectly. It's a young millennial that walks into an AMC and the cashier asks him, does he need anything? And he says, no, I'm okay. I'm just checking on the feeders. And the cashier looks back and he says, well, what, do you work here? And his answer is, no, but I'm a part owner, or I'm the money, he says. And I think that sentiment is hilarious, and in an entertaining way, it really
depicts what's going on here. You have these investors, and a lot of them, they're popping on threads, and they're talking about experiences at AMC or wanting to save AMC. There's some personal connection that we're seeing here. And you saw that, too, with a company like Hertz, when people were jumping into that name and they recognize the brand, they recognize the name. Some of these meme stocks, they have that similarity, that similar thread running through, where there are people that have engaged with these companies.
And I just want to mention for our Bloomberg audience that's watching us on YouTube, we were just playing the video, and this individual that you're talking about was playing both roles of the investor as well as the popcorn or the theater worker as well. But it's Joel, we're in a different world here.
Well, what I love about it is like it kind of can inspire those of us who maybe don't own AMC to like, I'm just going to look through my portfolio this weekend and decide, what am I a part owner of that I'm going to go kind of like show up and say I'm a part owner of. But in seriousness, Kat, like I'm drawn to this idea that there is a change in even what it means to be a CEO because of this, and that we could potentially see executives interacting with investors, small-time investors, in a completely different way going forward. Do you feel like is this sort of a canary in the coal mine? Are we going to see more stuff like this going forward?
It's a great question, and something that we're definitely tracking, because we haven't had any moment in time to compare it to. This is such a unique, these are unique circumstances that are popping up because of everything that's come before. So you have the pandemic, people at home, people engaging on social media. I think social media was there even beforehand, but this is like an extreme. This is kind of the next level. And I think that we're going to see if a free popcorn or these incentives, if there are other companies that might offer, I don't know, a free T-shirt or a visit to a location, if it's a retailer or an experience. It's definitely an interesting trend that's becoming more and more popular.
I got to say, in the normal times, I frequent AMC, not infrequently, and I have to also say that it's just not that good of an experience. The popcorn's not that good. I don't see myself wearing an AMC shirt, but
one man's view.
I know, one man's view, especially when you compare it to the Alamo that I go to in Brooklyn. It's just a completely different experience. So I get all of it, and I think it also just does speak to the moment of people being so cooped up for a year that even AMC starts to sound good, right, Carol? I mean, Carol, are you going to AMC this weekend?
That's a no.
Okay.
Kat, are you going?
If I'm trying to,
you might have some reporting to do, Kat.
I know.
Well, the point is, though, this story isn't over, and that's the thing. As we watch the gyrations on a sometimes hourly basis in this stock, I mean, the swing alone yesterday was crazy. Kat, we have to remember that this story isn't over yet. Just quickly.
It definitely is not. And I have woke up every single morning, and I know when there's when there's an active story going on, I can judge it by my inbox. And because of AMC, I know every single time my alarm goes off, well, here we go again. And it seems like the same story, but it's not. It's just a development. And it's one that we'll continue to follow really closely going ahead.
Not a sequel, it's a remake.
Exactly. All right, great stuff. Great reporting and a great read. Joel, thanks so much. Editor of Bloomberg Business Week on the remote access from Brooklyn. Have a great weekend. Kat, you too. Kat Doherty, she's our high-yield distressed debt and bankruptcy reporter at Bloomberg News on the phone from Boston. I just tweeted out her story. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next. We're talking jobs.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
June 4th, we've got the Dow, the S&P, NASDAQ, all moving higher. S&P very close to a record. That record there would be 42.32 right now. The S&P is at 42.29, up 36 points, higher by 0.9%. Stocks are rallying after a pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages adds to inflation worries. Constance Hunter is chief economist at KPMG.
So we think the pandemic is really holding back the pace of recovery, even though we've made huge progress, even though, we've seen some surges in jobs gains like we had in March. The pandemic's really creating speed bumps here for the pace of jobs growth and the pace of the recovery overall.
10-year yield 1.55%, 10-year up 19.30 seconds. Gold is up 1.1% now at $18.91 the ounce. West Texas Intermediate crude up by 1%, up 69 cents a barrel, 69.50. Brent, by the way, the global benchmark 71.78, up 0.6%. Airlines in the U.S. and Canada are pressing Justin Trudeau's government for a plan to allow more flights after a Canadian advisory panel said it is time to loosen COVID-19 restrictions at the border. Mixed picture for a lot of the airline names today. American, for example, lower by 2%. UAL down by 1%. Delta down 0.2%. Discounter Southwest up by 0.5%. J.P. Morgan Chase is restarting its political giving after suspending contributions earlier this year following the deadly siege on the U.S. Capitol. J.P. Morgan Chase shares, they're up now, little change, but up less than 0.1%. Recapping, S&P up 0.9%, the Dow up 0.5%, NASDAQ up 1.5%. I'm Charlie Pellet. That is the Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. It is brought to you by BNY Mellon's Pershing. Insight is virtual and free beginning June 8th. Learn how Insight's content will leave you ready to lead effectively and think differently. Register now at bnymmelloninsight.com. All right, obviously one of our top stories on this Friday, it's a jobs Friday, you know that. And U.S. job growth accelerated in the month of May. The unemployment rate fell, signaling firms are making some progress, filling a record number of openings as the economy powers up. Let's get more on U.S. employment trends. Richard Walquist is president and CEO of the American Staffing Association's trade group representing staffing, recruiting companies, and the like. He joins us on the phone from Alexandria, Virginia. Richard, nice to have you here. How are you?
Doing very well, Carol. Thanks for having me.
Well, how do you see the job market right now in the United States?
Well, today's numbers were very encouraging, but I think that it also reaffirmed the fact that the labor market is yet to be fully vaccinated. We've got a long way to go to meet demand, and COVID continues to impact labor supply. Our members tell us our data shows, and I think that the BLS data also reflects the fact that it's not so much that we've got a job shortage anymore. There's an employee shortage, and we got too many people on the sidelines.
Well, that's interesting. So how do we get them back? And is it, we've talked about the reasons why. A lot of it is people are still nervous. There are people who aren't vaccinated. There are also people who still have kids out of school, and it's just difficult for them to go back to work. What are the reasons, though, that you're seeing as to why there isn't the supply to meet the demand?
Well, you've hit on a couple of the key reasons, Carol. And in addition to that, there is a sense of employees in the United States that it may not be safe for them to go back to work. There is a trust issue in the United States, and we see it that it refers to institutions, it refers to employers, and certainly around something like a novel COVID virus. One of our recent surveys indicated that 54% of U.S. adults indicate that they still see barriers to returning to physical work. And it is a big concern about catching COVID in the workplace. As vaccination rates go up, though, things are really going to change. As schools reopen, I think in the fall, Carol, things are going to change. But we've got to get down that final mile. And right now, we've got a large percentage of the American population that has yet to get vaccinated, and many of them are saying they're not sure they're going to get vaccinated.
Is this true, kind of agnostic across all industries, or are you just seeing it? Because, you know, the jobs numbers show that a lot of people are going back to hospitality. We did see some shortages when it came to construction, but that could have been supply constraints because of materials. But what are you seeing among your members in different industries?
It is really across the board, and just like COVID was an equal opportunity pandemic, we are seeing equal opportunity increases in demand. A couple of the sectors that were the slowest of coming back, certainly leisure and hospitality, as the strictures put in place by the federal government and the states and the cities have opened up. Now the biggest challenge is ramping up, and especially as we get into the summer holiday season. But we're seeing it across the board. The industries that had the shortest supply of available skilled talent going into COVID are still finding that they're having a tough time recruiting. So healthcare services, doctors, nurses, advanced clinicians, therapists, across manufacturing and construction, skilled trades. Oh, there is such a demand, Carol, for people in skilled trades, electricians, carpenters, machinists, mechanics, welders, plumbers, and these are good paying jobs and they've got good career paths, but continue to have challenges in transportation, warehousing, logistics. You can just kind of throw a dart at the wall in terms of an occupational scatter map, and you're going to find that there are opportunities. And a couple of things that are really hot continue to be IT, web software development, and everything related to cybersecurity.
Well, and one of the things that we saw that average hourly earnings went up a little bit. So we've been watching that in particular. What are your members saying? Are they having to kind of maybe pay a little bit more to get workers because there is that imbalance between incredible demand for workers but not the supply being there?
Carol, they are looking to use every arrow in their quiver. And so they're working with their clients. They say, look, we have done everything we possibly can do to try to get the talent you need. We are competing against your competition, against all other employers. And absolutely, one of the first level strategies is to increase wages. And I know that there are concerns about is this going to be inflationary? But right now we've got work that needs to get done. It's actually could be a headwind on GDP continuing to grow and increase. So yes, wages are increasing, and I expect that that's going to continue.
What about hybrid workers? Are you seeing an increasing amount of companies or members say it's okay to do hybrid working? And I wonder if more companies came out and said, listen, folks, we'll work with you. You want to stay at home? That's fine, but we just need you to work.
I think you put your finger on the number one challenge of employers all over the world. They had no playbook. Many of us had playbooks for disaster planning and disaster recovery. Nothing like this where workers have been working largely remote or 100% remote for 15 plus months. And yeah, now employees are saying, we want to come back to work, but we really don't want to be back at work, and probably not 5 days a week. And so, yes, I expect that the standard is going to be some form of hybrid work. And right now, employers are trying to figure it out. We saw data coming out of McKinsey just last week that indicated that there were only 11% of executives who were interviewed that said that their companies had actually designed and implemented their return to work, their temporary, their full-time work policy, their telecommuting policies. So only 11%. And this is the kind of thing that employees are looking for.
What's everybody waiting for? I just got about 30 seconds here, but what I do think I like to ask a question, get an answer. I like clarity, but what's everybody waiting for? Are they just looking at their competitors to see what they're doing?
There's no guidance around something like this, and they're trying to strike the balance, Carol, between what they think has worked in the past in terms of being able to build strong competitive companies and the desires and the wants and the needs and the concerns of employees. So many of the firms have actually done polls of employees and said, how do you feel about coming back to work? When you get the results, you're kind of stuck with them. And so they're trying to figure out what the balance ought to be. I think that it's going to be a hybrid solution.
All right. Going to leave it there. Hey, great to check in with you. Richard Walquist. He's President and CEO of the American Staffing Association, on the phone from Virginia. Headline crossing the Bloomberg. Wall Street banks reining in hedge fund short bets on meme stocks. So not seeing any market reaction, at least initially, still staying near our highs, but we're going to watch to see if there's any impact on that. Let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, President Biden says the May jobs report showing employers adding 559,000 jobs is confirmation the nation is making historic progress in coming out of the deep pandemic-induced recession.
The president ascribed the renewed growth to the steps Americans took to combat COVID-19, from wearing face masks to getting vaccinated, plus the government stimulus measures.
Vaccinations are up, jobs are up, wages are up, manufacturing is up, growth is up, people gaining health care coverage is up, and small business confidence is up. America is finally on the move again.
The president said since the week the jobs survey was taken, 21 million more Americans have been vaccinated, which points to stronger growth ahead. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is meeting again this afternoon with Republican Senator Shelley Moore Capito to discuss the infrastructure package and how to pay for it. Biden has dropped some of his demands, like raising the top-end corporate tax rate. He's now willing to establish a 15% minimum tax on corporations. Republicans are still well below what the administration has requested. Well, former President Donald Trump will have to wait a little while longer before being allowed back on Facebook. Bloomberg's Naomi Nix has more on Facebook's decision today to keep him off the social media platform until at least 2023.
This announcement today is saying, hey, this is how we're going to handle Trump. We're going to suspend him for 2 years, and then we're going to see if he continues to be a risk to public safety going forward.
Trump calls today's ruling an insult. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar joining me is Charlie Pellet of Bloomberg News. Charlie, I'm just going to do a little bit more on this headline that just crossed about Wall Street's top brokers quietly tightening their rules for who can bet against retail traders' most popular meme stocks. So Bank of America, Citigroup, Jefferies Financial, they are among the firms that have adjusted their risk controls at prime brokerage operations, according to people familiar with the moves. The banks are trying to protect themselves against fallout from extreme surges and dips that have characterized trading in companies. You know who they are, everyone. AMC, Microvision, GameStop. These are the names we've been talking. I mean, AMC alone, you know, yesterday, the swing, I think it was down almost 40% at one point and then up a few percentage points. These are some big moves.
Indeed. And just should point out that AMC shares right now, as we speak, now down by 6.5%. GameStop on the minus side by 3.8%. This all according to sources asking not to be identified because they're discussing internal policy decisions. But the changes will mean some hedge funds and other institutional investors will now face higher collateral requirements or are limited from shorting some of those stocks.
Yeah, exactly. So this is kind of interesting, kind of reining in those retail investors are potentially limiting some of the exposure there. So we're going to keep watching that. I am watching AMC too. As you said, Charlie, it's down about 7% here. And it looks like it did take a little bit of a leg down. It was down already, I think, on the day, but just taking a little bit more of a leg. Having said that, two other things we want to bring to your attention. Bitcoin slipping after Elon Musk tweeted a broken heart emoji for the token. Maybe a little bit of a split after being kind of very much in love with the cryptocurrency. Maybe not so much, Charlie.
Indeed. Musk has certainly been roiling Bitcoin and other digital tokens with a string of social media posts. Most notably, the tycoon last month reversed the decision to allow purchases of Tesla electric vehicles with Bitcoin. Should point out that the Bloomberg Galaxy Crypto Index is retreating today. Right now, as I look at that index, it is down now by 4%.
He loves it. He doesn't love it. He loves it. Jack Dorsey, by the way, of Square, may build a Bitcoin hardware wallet. We also heard that too as well on this Friday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. S&P 500 Index very close to a record. It is an update. The NASDAQ 100 Index outperforming. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is with the Friday edition, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green today with the Dow currently up 157 points. S&P's gained 35. NASDAQ rises by 191. The U.S. 10-year yield drops to 1.56%. Gold is up 20. Bitcoin drops 4%. And transports drop 102. Among the main 11 S&P sectors, tech and telecom led. Only utilities fell. And leaders to the upside in the Dow, Salesforce and Intel, while travelers and UNH led to the downside. In other news, most California pandemic restrictions will be lifted on June 15th. Square is considering making a hardware wallet for Bitcoin, and the G7 nears a deal for at least a 15% global minimum corporate tax. Wrapping things up, eBay hit a record high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Bitcoin, by the way, down 4.1% into here live. Breaking news over your Bloomberg. Type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. I got to say, I started reading this story this morning, finished up a little bit later on when I got to the office. I love it. It is among our most read on the Bloomberg terminal today. Once you hear more, you'll understand why. It's about how some MIT students who participated in a grand experiment at the school a few years ago profited nicely when it comes to Bitcoin. That is, if they held on to it. Let's get to it with Bloomberg News reporter Sophie Alexander. She's with us on the phone in New York City. Sophie, it's such a great story. Tell me, first of all, how this came to your attention and then the individuals you talked to.
So this was something that happened back in 2014, and so it's been a few years, but when Bitcoin prices started rising rapidly earlier in the year, my editor pointed out that this had happened, and, it would be a good idea to check in with some of the students who had received it to see, did they keep it, what happened.
Okay, so tell us about the people you talked to, because there's one, Mary, she actually held on to it, right?
That's right. I was looking for people who had held on to it, and it was actually kind of hard to find people because they started this in 2014. At that point, Bitcoin wasn't very big at the time, and then it started rising in 2017, and around mid-2017 is when they stopped tracking it. But later that year is when it really spiked. And so a lot of the people I talked to had sold it around then. A couple of people I talked to, Mary, and then another character later on in the story, Marilyn, also kept it. And they're in the camp of don't really pay attention to Bitcoin, don't really care about it, and they still have it just because they haven't really paid much attention to it and they haven't really thought about selling it.
All right, so I think I buried the lead, but tell us what the grand experiment was. And because I remember actually here with Matt Miller of Bloomberg News, I think it was just in the early days of crypto. It was like, can you actually buy anything with it, right? When we were trying to figure out if it's a currency, and I think he went on a mission to try and do that. But take us back to those early days when it wasn't worth much. What was the grand experiment that MIT was doing, and how did they go about it?
Yeah, so it was 2014. Bitcoin wasn't very big. There were a couple students who were really interested in it and wanted to see what would happen if they gave all their peers Bitcoin. Would all of a sudden all these businesses start accepting it and, create this Bitcoin economy? Would, these MIT students who are really innovative and entrepreneurial, would they create businesses built around Bitcoin? And so they were just trying to see what would happen. So what they did is they offered every undergraduate $100 worth of Bitcoin, and about 3,100 students signed up for it. And about 10% sold it within the first 2 weeks. About a quarter sold it by 2017. And now we don't know how many people still have it, but not really much happened. At the time, it was considered sort of a failure because no one really started using Bitcoin as a currency or creating these innovative apps. It was just sort of in people's back pockets.
All right, so we know that Bitcoin's been on quite a ride, and at its high point, worth thousands of dollars, right? I think almost $65,000 back in mid-April. We've definitely come down from that. Did anybody hold on to it and sell at the peak?
Not that I talked to. I talked to a couple of people who sold it back in around 2017 when it was peaking around 20K back then, I want to say. And people thought, at this point, Bitcoin's not going to go any higher than that. And a lot of those people really regret doing that now, of course. But that's better than a lot of people. I talked to someone, Mary, actually, who remembers a lot of her classmates sold it when Bitcoin started dipping soon after they started the project because they thought Bitcoin's not going to exist in a few months, so we might as well get what we can out of it.
And some people actually use it to buy stuff, right?
Yeah, so the bookstore started accepting Bitcoin, and there were a couple of restaurants around Cambridge that started accepting Bitcoin. And so I talked to a few people who used it at a sushi restaurant, bought some MIT merch at the bookstore, and then Mary, she almost bought a T-shirt for her dad, but didn't end up doing that, which was lucky in her case.
It's just kind of random's kind of interesting, but it reminds us that, in those early days, we were all trying to figure it out. And at that point, we really did think about it as a currency. I think the conversations have certainly evolved to commodity, collectible, a lot of different other things. What really just stood out for you in reporting this story?
I think that's it. At the time they were trying to figure out what Bitcoin was good for. And at this point, it seems like its best use case is as an asset. And back then they thought it was early days, but now they're still saying it's early days. So it could evolve beyond that. But it's sort of been interesting to see how the thinking around Bitcoin has evolved since they started in 2014.
I'm just impressed that the people didn't necessarily lose their codes. There's so many stories of people who were like in it early and then misplaced, where to find it.
That did happen to some people. The wallets went out of business, or they lost their passwords, things like that.
All right. Well, it's a fun read and another interesting aspect of this story. So the second most read story, too, on the Bloomberg on this Friday. Sophie, thanks so much. Sophie Alexander, reporter at Bloomberg News, joining us on the phone from New York City. The most read story on the Bloomberg in the past 60 minutes, that story we just brought to you with Wall Street's top brokers quietly tightening the rules for who can bet against retail traders' most popular meme stocks. So we see B of A, Citigroup, Jefferies moving in when it comes to some of those names, those meme stocks, whether it's an AMC that we've been talking about over the past year. So changes mean some hedge funds and other institutional investors now face higher collateral requirements or are limited from shorting certain stocks, according to those in the know. So a little bit of a shift there. Shares of AMC, by the way, they did dip around 5-6%. They're now down just about 4%. It's been down for most of the day. Coming up, your chart of the day with Dave Wilson right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everyone. This is Bloomberg Business Week. Coming up, we're going to talk a little bit about the Russell 2000. I heard Dave Wilson earlier on Bloomberg Radio, putting it into perspective. AMC, not really a small cap anymore. So what does that mean when we do some rebalancing? We'll get to that in just a moment. First up, though, let's get back to your top business stories. I look at that trading day. And Charlie Pellet, we're just about, 29 minutes to go.
Indeed. And the big question is, will we or will we not see a record today in the S&P 500 index? Just about 4 points to go right there. 4232.60 is the number to beat at the closing bell today when that clings on Wall Street. Right now, the S&P up 35 at 4228, up by about 0.9%. We've got the Dow up 163, up 0.5%. NASDAQ up 193, higher by 1.4%. NASDAQ 100 index, full of those tech names, outperforming today, up 1.7%. 10-year yield 1.55%. Gold up 1.1%, 18.91 the ounce, and West Texas Intermediate crude this Friday up 1%, 69.53 a barrel. Stocks are rallying after a pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages adds to inflation worries. The UK has approved Pfizer and BioNTech's COVID-19 vaccine for use in 12 to 15-year-olds as a number of countries move to inoculate children in a bid to end the pandemic. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He told us he is concerned by the slowing pace of vaccinations.
We really need to push past the 70% guideline that has been set now by the government. I've always viewed that as a minimum. And what I mean by that is you reach that 70%, you'll have a massive effect on severe disease and hospitalization because you've immunized those sensitive populations. But if you want to get to the concept of herd immunity, where everybody, including the unvaccinated people in the population, are benefiting from people who get the vaccine, you have to push past that 70% level.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up now by 0.5%. The ADRs of BioNTech up 8.4%. ADRs of AstraZeneca up 0.8%. Moderna's up 6.1%. Johnson & Johnson, little changed, up less than 0.1%. Recapping stocks higher, S&P up 35, up 0.9%. I'm Charlie Pellet. It's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week on this Friday, and this is Bloomberg.
Born to lose, and now I'm losing you. Born to lose.
It's all about losing. I'm assuming this is Elvis, right?
Well, actually, no, but it's an artist inspired by Elvis. Robert Gordon, rockabilly singer, popular in the 70s and 80s. You know what he's known for? The first studio version of Bruce Springsteen's Fire.
I could see that, though, right?
Oh, absolutely.
Probably sounds incredible.
Yeah. I mean, Bruce put out the song on a live album in the mid-'80s, but Robert Gordon was the first one to record it.
All right, so talk about losing, and this has to do with small caps.
No, it does. You know, we're getting to the point where the Russell indexes, you know, the Russell 1000, 2000, 3000, and a whole bunch of others are going through a process called reconstitution. In other words, they
Different from rebalancing.
Right. They get overhauled once a year. So, you know, the bigger companies go into the Russell 1000, the smaller companies in the Russell 2000, etc. Now, that may be more of an issue this year for investors and funds that are tied to the Russell 2000 than it's been in the past. You know, I ran the numbers on the Bloomberg terminal and found out that our favorite meme stocks, AMC Entertainment and GameStop.
Heard of them?
Yeah, I thought you might have. Together accounted for 7.5% of the Russell's gain this year as of yesterday.
Wow.
And, you know, so, I mean, you're talking about companies clearly that have moved beyond the limit in terms of market value for being in the Russell 2000. Yesterday you were looking at $26.4 billion for AMC, $19.2 billion for GameStop in terms of market value.
So the Russell's up almost 16%. So you're saying almost half of it.
I'm saying actually, because it's 7.5% of the gain, it's more than a percentage point.
Okay.
Two stocks out of more than 2,000 in the Russell. Our numbers, show that there are a few extra, which makes sense because, you get companies that do spin-offs, you get initial public offerings. I mean, they go into the indexes during the course of the year, but everything else is shifted around in this rebalancing. We actually get the preliminary list after the close today about, the Russell 1000, 2000, and so on. 3 weeks from now, the process concludes, so you get a whole bunch of trading, and then Monday, June 28th, that's when the transition is complete. And AMC Entertainment and GameStop, it's safe to say, will no longer be in the Russell 2000, bolstering the index as they have this year. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So what you care about is if you're investing in some kind of fund that's tracking either the Russell 1000 or 2000, correct? Like you could see some performance differences based on this reconstitution.
You absolutely could. At least it'll be a very different look to the index. In fact, it's funny. The chart shows you the 10 stocks that have contributed the most to the Russell's gain this year.
Right.
Every one of them, you look at their market values, is headed for the Russell 1000. So it's going to be a different index. You're going to have to depend on different stocks to get your performance. And, some of these high flyers are just not going to be there anymore.
Yeah, so that's something to keep in mind as you look at your portfolio and performances. Hey, listen, stock of the day. What do you got for us?
Hooker Furniture. The ticker is HOFT. Now, it's one of the few companies that actually reported earnings today. Not a popular time to put out quarterly results, but they went over pretty well. You're talking about the fiscal first quarter. Earnings more than double the average analyst estimate in the Bloomberg survey. Revenue above projections as well. Put that all together, stock was up as much as 14.5%, and it hit a 2.5-year high.
Yeah. That's a big move. It's up about 27%. So playing into, again, everybody's focusing on their homes.
Absolutely. And you want new furniture.
Yeah, exactly. Based in Virginia. That's a good one. Hey, look for Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, on Twitter @TheOneDave. I love, though, what you said about the reconstitution, because I just think that might catch some people unawares if they don't kind of check it out.
Yeah, absolutely. It's a process. It happens over time. But, you get to the end of June, it's something you got to be thinking about if you're invested in an index fund or an index ETF.
Yeah, exactly. All right, good stuff. Have a great weekend.
You too.
Thanks, Dave Wilson. All right, you're listening to Bloomberg Business Week. Let's get back to world and national news. For that, it's over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Joe Biden is calling the latest U.S. jobs report great news for the economy. U.S. employers added 559,000 jobs in May, a number that fell short of many economists' expectations. But Biden says it is still progress.
We're on the right track. Our plan is working, and we're not going to let up now. We're going to continue to move on. I'm extremely optimistic. I hope you are as well.
Biden says we need to seize the moment and pass an infrastructure program. He's meeting this afternoon with West Virginia Republican Senator Shelley Moore Capito in hopes of reaching some sort of consensus. Former White House counsel Don McGahn has been taking questions behind closed doors today with members of the House Judiciary Committee. Democrats have been anxious to question McGahn about whether ex-President Trump tried to obstruct the Russia investigation. The Trump White House repeatedly blocked McGahn's testimony, leading to a roughly 2-year legal battle. Committee Chair Jerry Nadler says McGahn has not been very forthcoming.
I think he's being somewhat difficult, but you'll see that when the transcript comes out.
Nadler says it is unclear when that transcript will be made available to the public. The third leg of the Triple Crown, the Belmont Stakes, will be run tomorrow. The race returns to its regular spot in the order, third after being moved to first last year due to the pandemic. Odds makers have named Essential Quality as the favorite. Missing from the field, though, is Kentucky Derby winner Medina Spirit. due to failed drug tests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master, joining me once again is Charlie Pellet, someone who loves to travel and has been doing a little bit, although more domestically than internationally. Charlie, we've been watching the airline sector. It took a hit yesterday, down about 4%, some concerns. A little bit about the outlook, a little bit lower today. Delta CEO sees U.S. business travel recovery by summer of 2022. So we're talking about not this summer, next summer.
Indeed. He also had some comments about transatlantic travel, near and dear to my heart. Says that will begin to return in the second half. Other long-distance trips next year. Makes sense as offices reopen. People decide that, yes, it is safe to be back in the office. Yes, it is safe to be out and about and traveling again, that the airlines would expect to see some degree of pickup in business travel. But one of the major issues for a lot of people, particularly leisure travelers, is the uncertainty. You plan a trip specifically in Europe, and then all of a sudden, the UK government changes the rules, and next thing you know, there you are scrambling to get tickets home. Case in point, Portugal, with the announcement yesterday, all of a sudden, you've got airfares going through the roof. People may be stranded, and they're worried about, should I take a holiday if I'm going to have to quarantine when I come back?
You're talking about this story
Portugal story.
Yeah, UK tourists scrambling to return from Portugal before a quarantine requirement kicks in on Tuesday, so driving up ticket prices. We're talking about $1,000 potentially to go from Portugal to London City Airport. That was on Monday night. Yeah, it's hard to kind of figure this out. If there was ever a time to buy, travel insurance, this was the time to do it. But what's interesting is, going back to the Delta CEO, Charlie, we know that business travel, it's very important to their bottom line. Corporate demand, particularly important to Delta. They reaped about 50% of its passenger revenue from business customers in 2019. International corporate travel is especially lucrative. I mean, this is really where they make money.
Indeed. And one quick takeaway from our conversation here, Bastian continues to expect that video conferencing is going to reduce corporate travel 20 to 30% right now. Looking at Zoom shares, they're up 5.1%.
Yeah, exactly. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Very close to a record. 4232.60 is the record there. S&P right now at 4231, up 38 points, up 0.9%. Stocks rallying after a pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages adds to inflation worries. So with 13 minutes to go ahead of the closing bell, stocks advancing. The Dow up 180, up 0.5%. NASDAQ up 201, up 1.5%. NASDAQ 100 index up 1.8%. NASDAQ 100 climbing towards a one-month high, driven by gains in mega caps that include Microsoft and Apple. Right now, we have got Microsoft up 2.1%, Apple up by 1.8%. This update is brought to you by BNY Mellon's Pershing. To learn why Insight is the essential event for the financial advice community, register now at bnymелloninsight.com. It begins on June 8th. 10-year yield 1.55%. Gold up 1.1%, $18.91 the ounce. West Texas Intermediate crude up now by 0.9%, $69.44 barrel. Bottom line here, S&P on track for its second winning week in a row. I'm Charlie Pellet. That is Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. It is time for the drive to the close. Just about 10.5 minutes left in the trading session. Getting ready to wrap up that Friday trade as well as the week overall. Let's get to it with Ryan Dietrich. He's Chief Market Strategist at LPL Financial. He is with us once again on the phone in Charlotte, North Carolina. So, Ryan, it's been certainly an interesting week here. How did you see the jobs report? Some reporting saying it was a little bit of a Goldilocks report in that, yep, we saw job creation, but for the second month in a row, we missed the estimates, and it's a reminder that we still have also millions who are out of work.
Yeah, you're right, Carol. First off, thanks for having me back. But it is kind of a Goldilocks scenario. That was the word I think we're all using where, hey, we made over, close to 600,000 jobs, but it still missed the mark, right? So it's like, okay, what has the Fed been telling us, right? The Fed said the inflation's transitory, but they're not going to start to do anything until we start to see the employment picture come back. And we're still about, 8 million jobs away, I guess, from the peak pre-pandemic. So the truth of the matter is the economy is improving. Employment's not perfect, but the Fed is still a backstop. And, we'll see. I mean, as you and I speak here, the S&P is about, it is right at an all-time high, literally at an all-time high right now. We'll see if we close there.
Right.
But really, stocks like this. We're
42.32.
Right,
yeah, 42.32
Yeah.
would be a new high if we actually close there today. And we have seen an uptick in the last few hours, or not even, I feel like the last few minutes here. So how do, once again, the mega tech are back leading the equity markets higher. Is that where you want to be?
Yeah, well, they are today. And honestly, I come on to you about once a month for a while saying, we don't think so. We think, the value trade is where you want to be, your industrials, your materials, your financials as the economy opens up. And I'm aware tech's doing well today. And that doesn't mean tech can't keep going up or the NASDAQ can't keep going up, but just on a relative basis, the last several months, we've seen that underperformance. So we think today, or maybe even a little bit of a blip, but we still think the cyclical value is where you want to be. And, you mentioned, the all-time high, right? So here's a neat stat for you. 10 days in a row now, we have been within 2% of an all-time high, but not made an all-time high. Now, today could be day 11, depending if we don't close an all-time high. What in the world does that mean? Well, there's that old saying, don't short a dull market. We've been having, honestly, a really dull market here as we flirt with all-time highs. So that's just something I think people need to remember.
Hey, what do you make of, we had a headline about 3 o'clock or a little bit about 10 after 3 Wall Street time, Wall Street banks reining in hedge fund short bets on some of those meme stocks. So maybe be complicating hedge funds and some institutional investors their ability to take short positions on some of these stocks, whether it's an AMC or GameStop or others that are coming to light. How might that impact the trade in some of those stocks, in your view?
Yeah, that's interesting. And I'll tell you this much. When you look at what's going on with the AMC, for instance, right? I mean, I saw the other day that it's up to 18% of some of the small cap ETFs, right? You look at the Russell 2000, AMC and GameStop, they dominated. So you're getting these huge swings in small caps because a couple stocks are moving. So that's something that investors really need to be aware of. We actually like small caps. We think small caps are.
Well, there's going to be a reconstitution, or Dave Wilson was just talking about that. There's going to be a reconstitution. So some of these formerly small caps names are going to be moved out from, maybe the Russell 2000 into the Russell 1000. So that will shift some of that.
Yeah, it will shift some of it, but we're living with it now. And I guess the truth is we do think in general, small caps are still an early cycle reopening play. And they had a huge fourth quarter, like a record fourth quarter. Now they've kind of just, consolidated almost all year, honestly. We think small caps can break out and do pretty well relative to the large caps still. That theme I kind of talked about earlier, the reopening.
You guys generally think that you wouldn't be surprised if stocks took a well-deserved break in June. Does that mean just kind of treading water, or do we see some of our guests have come on and actually talked about a little bit of a correction?
Yeah, we'd say more treading water, honestly, kind of like what we've been doing. I mean, you look at, I know you like talking about technicals. Here's one for you. So the markets are kind of going sideways. But if you look at number of stocks making new monthly highs, number of stocks making 3-month highs, 6-month highs, there's some deterioration in there. Nothing major, nothing that has us extremely concerned. Just that, we're not quite getting the broad participation. We are today, honestly, but before today, we haven't been getting that broad participation, which simply says maybe, again, after an 89% rally, we can consolidate. That's truly what markets have been doing for a while now. It can continue into the summer months, really.
Yeah. How much are you watching kind of what happens in this first half of the year, once we get through the month of June, and what it maybe tells us about what comes in the second half of the year? Is it market driven? Is it fundamental driven? Is it economic news driven? Is it Fed news driven? Is it all of the above?
Yeah, I think you just nailed it. It's a little bit all of the above. I mean, all those things are things we're paying attention to, but we just did a study. We just had the 100th day of the trading day last week, 100th trading day of the year.
Yep.
And when you're up 10% for the year, Carol, like we just were this year, the rest of the year's up 84% of the time it's higher, up about 9% on average. Compare that with your average year, the rest of the year up 70% of the time, up about 5% on average. Long way of saying a good start to a year is usually pretty good the rest of the year. 13 and 19 were the last 2 years we had a good start like this. And as we remember, those are 2 years, the second half of the year, you probably didn't want to be avoiding stocks. Stocks continue to outperform bonds, and we think that'll be the case again when all is said and done in 2021.
Right, but it doesn't necessarily mean we move much from here, correct? Or we could see some volatility where you see some pullbacks and maybe move back up to existing levels or previous highs.
Exactly. That's where it kind of goes down to the sector level, right? You look at something like energy. I mean, energy is still only, about 3% of the S&P 500. It's had this huge rally, so that's a group that's actually done really well lately, whereas the market, as everyone says, look at the Dow, the S&P has gone sideways. So if you dig under the surface a little bit, there can be opportunities, but for people just looking at the big picture, S&P 500, yes, sideways makes sense, but under the surface, those cyclical value really are still doing well and still continue to lead in our view.
What does it tell you when both stocks and bonds go up? We did see yields back off today.
Yeah.
The Treasury market really told you something today. Right now, that 10-year note at 155.
Yeah, I mean, yeah, exactly. That's a little bit of a surprise. I mean, most people, including us, are looking for a higher 10-year yield. It wouldn't be something if Mr. Market throws the curveball. And you know what? Look at gold. Gold's up 1% too. So, we've got everything just about up today, from metals to the stocks to the bonds. For a one-day blip, we're not overly concerned. It seems like Fed days and jobs days. You get these weird things that kind of happen, and that's the case once again. But still, stocks are outperforming bonds, even on the upside, and that's something we still think would be the case.
You do? Okay. So what's the exposure, though, to the fixed income world in your view right now?
Yeah, well, we've got different models.
Is it none or, yeah?
No. If you have a 60-40 portfolio, we'd say about 35% bonds, 65% stocks. We're overweight stocks relative to bonds in our core average portfolio.
All right, interesting. And would you still, though, you mentioned, we talked about, just to kind of wrap it up here, the big mega tech companies have some exposure, but that's not where you see the real momentum going maybe in the next year or so.
That's exactly right. There's still great earnings, still solid fundamentals. They've just had a great run. They might, go with the market. We're even weight technology here. We just think there's a little more opportunity in the industrials, materials, and financials.
Sell in May, sell in June?
That's exactly right. I mean, May's been higher. What is it? I think it's like 8 of the last 9 years now. So, yeah, let's sell in June.
So
So
true,
far, we're
right?
not selling in June yet. You know what, Carol? It is the last 10 days of June historically, and this is just historically.
Yeah.
Historically, the last 10 days of June are very weak. First half's not too bad usually. So we'll
right.
see if it plays out again here.
All right, going to leave it there. Hey, listen, Ryan, have a good weekend. Really appreciate it. Ryan Dietrich, he's Chief Market Strategist over at LPL Financial, joining us on the phone from Charlotte, North Carolina. What a week it's been, and we are going to see stocks pretty much wrap up just off their highs of this session. Doesn't look like we're going to see a new record on the S&P unless we see an uptick in the last few minutes, but we'll be tracking that and certainly keeping an eye on it. Coming up next, though, we're going to be joined by our Bloomberg TV team for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the close on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Alex Steele counting you down to the closing bell, and here to help take us beyond that bell. Carol Massar joining us right now to bring together our Bloomberg television, radio, and YouTube audiences worldwide, parsing the crucial moments of the day. Our global simulcast here on this Friday, Carol, and it looks like at least we're going to come close here to a record high.
Yeah, at least on the S&P 500, 4232 is the number we're focusing on. We're at 4229 right now as we speak. What a day, you guys, when you've got stocks up, bonds up, gold up. It's kind of hard to make sense. I keep hearing people say Goldilocks in terms of that jobs report. We're going to talk about it a little bit later, that we're seeing momentum, but it's missing some of the estimates, and maybe that's why investors feel like they could push certainly a lot of different asset classes higher, Taylor.
And the migration and the momentum of bond yields, of course, catching bid by about 7 basis points. Alex, this has really been a focus here on this closing bell show because you've really been in this range-bound scenario. It's Ian Lingen of BMO Capital Markets saying watch the 153 level. It is the long-duration bonds that are the most loved at this moment.
Yeah, but I don't think we can underestimate the power that the weaker dollar is actually having on the market. We've had a significant dollar uptrend that really destabilized a lot of the positions going into this year, and now we're seeing that decline on this sort of Goldilocks number, and that's really contributing, I think, to a lot of these stocks being able to move higher, particularly, Carol, as you mentioned it, commodities, et cetera.
Yeah, exactly. And look at those mega tech names. I mean, once again, I love it. Everybody's always like, okay, they've had their run, the valuations are getting crazy, and yet when investors come back into the market, Romaine, that's where they seem to go.
Yeah, you're seeing Microsoft, Apple, a lot of those big tech names move this market higher on this day. You're looking at S&P 500 right now as we get the closing bell, stuck right around that 4230 level. That's a couple points shy of that record high, but I think folks will take it. Up 37 points on the day, 0.9% on the day here, and that's about where it is right now on a weekly basis. The NASDAQ Composite up about 200 points, 1.47% up on the week by about 0.5%. Dow Jones Industrial Average up 0.5% on the day, and the Russell 2000 also having a day and a week up about 0.8% on a weekly basis.
Yeah, the Russell 2000 saying thank you AMC, thank you other meme stocks, because that certainly has provided momentum. 4232 though, we just missed it. We just had Ryan Dietrich on of LPL Financial. He says when there's a good start to the year, it often bodes well for the rest of the year. When stocks are up more than 10% on day 100 of a year, the rest of the year has been higher 84.2% of the time. So that's something to think about, Taylor.
And you see that positivity when we're taking a look at the sectors, and what I love to do for the radio audience, you don't need to know anything, go home. It's all green on the screen. Even the decliners.
Don't say that.
They're green, Carol. I didn't know that I could include green things in my decliners. Let's start with the positive stuff, though, first. It's autos, it's big tech, it's semi-equipment. What's interesting, it's Tesla here. Despite that tweet and some of the early losses in Tesla and some confusion about a breakup with cryptocurrency, Tesla continues to lead the day. For the hardware, it's companies like NVIDIA, Lam. Maybe the chip shortage might not be as bad as we thought. We certainly heard that from Ford earlier on this week. The only thing you need to know in the red, you're off 0.3%. There's only 2 sectors in the red today. Interesting, Carol, and I'm curious to hear your thoughts on this. Maybe the more labor-intensive companies, UPS, Delta, FedEx, those are the companies leading. You wonder with that wage inflation today, if those high labor-intensive companies are the ones that might be struggling in a higher inflationary environment.
That's a really good point. You know, what's interesting, though, is, and Romaine, you play to this when you look at kind of the quarterly earnings. Dave Wilson talks about this a lot, that Profit margins, we saw some tremendous growth in the last round of earnings. So will companies kind of swallow some of those wage gains and not pass it on to consumers? But that's a really good point. You mentioned gainers, Taylor, you mentioned Tesla up 4.6% today, reported the Model 3 headed for India, or was it just oversold? We've seen this name go down and down and down the last 4 days. It's off about 33% from its January high, so maybe some investors coming back. Also, the pandemic plays were really trading well today. DocuSign, we broke down their earnings yesterday, up 20%. Company much stronger than expected results in the first quarter, raised its full year forecast. So we saw that stock a big gainer. Zoom also up about 5.5% in today's trade. Again, earlier this week we saw Zoom top sales and profit estimates. ARK Investment ETF, Kathy Wood, they bought more than 96,000 shares of Zoom, so that certainly was at play. Lululemon, it seems like we loved yoga pants during the pandemic, guys, and we are still loving them.
Romaine calls them tights.
Well, when you take
They're
a look
not
at the
tights.
Yeah. All right. Well, we take a look at the decliners here. I mean, you mentioned FedEx here a little bit earlier. Actually, look at that. FedEx actually managed to actually, I'm not sure this is the right board here, but Mosaic, we'll keep going with this. Mosaic taking a leg down here on the day here, shutting down a potash mine in Canada about 9 months quicker than some folks had expected. Keep an eye on those office REITs as well. Simon Property and a lot of the others still pulling back here. Not quite full confidence here in the recovery. Pershing Square, that I can't even pronounce it, but that big SPAC that they did, a lot of people really scratching their heads about what's going on there. Down about 12% here on the day, and here's your AMC check-in down about 7% here on the day.
I love that Pershing Square story. You take a look at it like they're buying a 10% stake in Universal Music from Vivendi, but it's like, really? Is it a SPAC? Is it a Spark? It's really complicated. Okay, let's get a broader look here on the overall market in different asset classes here. So as we've been talking about, you see the S&P closing up by about 0.9%. You also have Canadian equities closing over 20,000 for the first time ever. They also had jobs report coming out today. And I mentioned the impact of the dollar. I don't think we can overstate this enough. The weaker dollar, and this really shows you, this is the Bloomberg Dollar Index heading down by 0.5 percentage point, but this just shows how strong other currencies are rallying against the dollar. The Japanese yen up 0.7%, Aussie dollar up over 1%. That really having quite an impact. You see bonds here buying pretty much across the board. Yields moving lower. Taylor will give you that insight in just a second. And I mentioned it also, if you have a weaker dollar, you're going to have stronger commodities. The gas, natural gas up by 2%, oil higher, copper higher, aluminum higher, you name it, it's up. Taylor?
Wow, you know what isn't up? Bond yields. They're down, Alex. They're down on the day. And I know we have a weekly board, but the weekly board really masks the underlying photo. Because if you take a look at the week, it kind of looks like UNCH, right? We were 79 basis points last week. Now we're 78. The 10-year yield were 159. Now we're 155. But all the movement, frankly, has been today. On a day like today, you're down 6-7 basis points on 5s, 10s, 30s. So Carol, I mean, it is a bond market, and we always talk about rate of change on the way up. You have to pay attention to rate of change on the way down. It is a 153 on the 10-year. That is sort of a key lower bound technical level, something that we'll be following that I'm not sure, you know, analysts were expecting. It was Priya Misra earlier this morning that said she's still looking at 2% by year end.
Well, listen, you know, once again, economists missed the mark when it came to the jobs report. Not as big a miss as we saw last month, but it reminds you that we still have, what, 7.6 million workers who are out of work at this point before we get to those pre-pandemic levels, Alex. And it really reminds you that you've got some wiggle room, or the Fed has some wiggle room when it comes to keeping policy low. I think the inflationary concerns weren't such a big deal today, and that's why you saw those moves in the bond market. I feel like they were very telling when it comes to investor psyche today.
But at the same time, you did have some inflation expectations right off the bat move a little higher on the 2-year. So the idea that you are going to have some overheating potentially in the short term, that's reflected in that 2-year break even. Then later on down the curve, you're seeing more of a sell-off, which means that maybe you won't actually see longer term inflation. It speaks to the whole, this is transitory, this is temporary.
Yeah, transitory, I mean, we talk about those base effects and how they've affected those inflation numbers. Of course, we do get the CPI once again next week. But the thing is interesting too, when we look at some of the inflationary numbers that came out of that ISM data and some of the other metrics here, there are some concerns here that there are elements of it that are, or potentially maybe not as transitory as some folks want it to be.
Unfortunately, all of you have put me in the position to be the millennial that migrates
how we
us
did that?
on over to
You're a millennial.
AMC
I did that on purpose.
and the meme stocks. So thank you for that. Now I'm going to be the non-serious one joking about meme stocks. But on a more serious note, Carol, we had a very interesting story just come out in the last hour about how you do have some big institutional investors after the Archegos blow up really starting to tighten back on some of the short selling policies that they have, given a week like this week when you had some decent blow ups.
Right, exactly. So we're talking about whether it's Bank of America, Citigroup, also Jefferies, talking about, quietly limiting clients' short sales. I do wonder how this will ultimately impact the trade. We were watching AMC right after it happened. It took a little bit of a dip down about 6%, but kind of bounced off a little bit, remained off that low.
Yeah, but was this what we saw today or this week with AMC? Was that really as much of a short squeeze as I think we saw back in January, February? I mean, nobody was having trouble selling. I mean, we certainly saw that yesterday. And even today, I mean, the flows were definitely pretty decent and relatively liquid here. So I understand why some of these banks would want to do this. I mean, they obviously have to sort of do some sort of risk mitigation after that Archegos blow up. But I think what you're seeing in the market right now really has a lot less to do with the short sellers and more just to do, I don't know what it is.
Well, but also, I mean, a lot of this is in the options market.
Yeah.
And then what happens with a gamma squeeze or a short gamma squeeze when you have to offset, if you're a dealer and you wind up selling an option, you have to offset that by buying or selling the stock. And that's sort of the feedback loop that happens with this kind of stuff.
The squeeze has been squoze.
Yeah, we always love talking about the gamma squeeze
You
on
call them
this
sconks,
show.
man, okay? So I'm talking gamma squeeze.
All right, we're going to leave it there. Listen, guys, all right, that's going to do it for our cross-platform coverage. Yeah, we're done. We got to run.
That was fast.
I know. Cross-platform coverage.
All right, have a great weekend.
You too. On Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again on Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everyone. So wrapping up the trading week, trading day, and as we just reported, we didn't quite get to a new record on the S&P 500, just shy of it at 42.29, 42.32 is what we were looking for. We hit it at one point, but just didn't close there. But nonetheless, we really finished at our highs of the session after a week that was full of a lot of interesting news, a lot of volatility when it comes to some of the meme stocks. And on a day when we got a jobs report that, again, for the second month in a row, we saw a shortfall along with views that recent inflationary pressures will prove temporary. So that is giving the Fed some breathing room. 500,000 jobs added last month. It's a good thing. It's a big number, but we're still 7.6 million jobs shy of pre-pandemic levels. So investors, as a result, we saw them taking on risk. They were buying stocks. They were buying bonds. They were buying gold. We saw a lot of asset classes on the move. All right, let's get a check on world and national news. For that, we're over to Nancy Lyons. She's in D.C. Hey, Nance.
You were just talking about it. Well, that May jobs report, the Biden administration sees that as indicating a strengthening recovery. Bloomberg's Irv Chapman has more from Washington.
Labor Secretary Marty Walsh cited an increase in manufacturing jobs, as well as in hotel and restaurant employment, in a Bloomberg interview.
This is a positive report. We saw a little bit of wage growth this month, and that's encouraging. So we've seen gains in different places, but we still got to have to remember that the economic hit to the economy, to jobs, were devastating.
Walsh urged employers to share their improved finances with their workers. In Washington, Irv Chapman, Bloomberg Radio.
President Biden and Republican Senator Shelley Moore Capito are trying again to reach some sort of compromise on an infrastructure package. Biden has backed off of raising the corporate tax rate and instead is suggesting a 15% minimum corporate tax rate to help pay for roads, bridges, and broadband. That 15% rate could soon be the global consensus. Finance ministers from the G7 are close to a deal to set a global minimum corporate rate of 15%. They're meeting today and tomorrow in London and are expected to release this statement after those discussions. Well, the White House is reacting to Facebook's decision today to ban former President Donald Trump from Facebook for another 2 years. White House Press Secretary Jen Psaki.
We learned a lot from President Trump, the former president, over the last couple of years about his behavior and how he uses these platforms. Feels pretty unlikely that the zebra is going to change his stripes over the next 2 years.
Psaki says January 6th is a perfect example of how words on social media platforms do matter. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Well, our Bloomberg Business Week weekend show features an interview with Jim McGreevy. He's president and CEO of the Beer Institute, someone very familiar with policy and political work, but now heads up the Institute. In this excerpt of our interview, he talks about hiring issues within the industry and the outlook for the summer. Your industry, are they having any troubles attracting workers, especially as the economy opens up and demand ramps up?
We don't see trouble attracting workers in our breweries and in the distribution business. Again, Carol, it goes back to the bars and restaurants, right? Nearly 570,000 jobs lost on a temporary or permanent basis, and you hear lots of discussion around the difficulties of getting people back into those places. And I think we really need to support the recovery by getting those folks back to work. And I think we're seeing that. I mean, our sense is from some of the data we're seeing that the food service in what we call the on-premise, the bars, restaurants, taverns, are starting to come back to pre-pandemic levels. I think we're going to get there, but certainly you do hear from a lot of different corners the discussion around the difficulty in getting some workers. And I think we're certainly seeing that in the bars and restaurants right now.
But we're not at pre-pandemic levels for the industry yet.
No, but, I think we're going to have a big summer for all Americans, and I think for the hospitality industry, and I think for the beer industry. So I'm very hopeful.
That's Jim McGreevy, president and CEO of the Beer Institute. That is the National Trade Association that represents America's brewers, beer importers, and supply chain partners. You can hear more of that interview. It is on our Bloomberg Business Week weekend show. You can find it on Bloomberg Radio this weekend and also on our podcast feed at Bloomberg.com. But some optimism in certainly what he's hearing and seeing from those members of his industry. All right, coming up next, we're going to talk about IT spending, PCs, what's going on at companies. We're going to check in with the president of the Client Solutions Group over at Dell Technologies.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. An update on Wall Street up week as well. 2 in a row for the S&P 500 index this week. The S&P up by 0.6%. Ahead of the weekend, we've got the S&P at 42.29, very close to that record, 42.32. But again, S&P up 37, up 0.9%. By the way, the S&P this year up by 12.6%. We've got the Dow up 179 today, up by 0.5%. Nasdaq up 200, higher today by 1.5%. And the Nasdaq 100 index, full of tech names, up 1.8% today. We did see shares of Microsoft rallying today. Apple as well. Microsoft up by 2.1%. Apple up today by just about 1.9%. A pickup in hiring last month bolstered confidence in the economy. A strong rise in hourly wages added to inflation worries. 10-year yield 1.55%. Gold up 1.1%. 18.91 the ounce. West Texas Intermediate crude up 0.8%. 69.35 a barrel. Brent 71.61 up by 0.4%. I'm Charlie Pellet. That Carol Nasser.
It is indeed Charlie Pellet. Some great market perspective. You know, I'm just looking at a story on the Bloomberg that talks about how the markets closed. Chris Zaccarelli, who's Chief Investment Officer at Independent Advisor Alliance, he said this is the second month in a row where the number has missed. And he said this month the expectations were even lower, but we still missed. And the short-term result is that the bond market will likely stay stable as there is less fear that the Fed will have their hand forced, and the spillover effect should be a relatively stable stock market. And you really did see that play out here in that the inflationary concerns, it's just a reminder that, you know, we missed the estimates, so maybe things aren't heating up as much, and maybe that continues to give the Fed some room to stay lower for longer, which is certainly something we've seen in the past. All right, want to get to our next guest because he joined us last time around. It was back in December. We kind of talked about everything about moving to Austin, the demand for PCs and more. Back with us is Sam Bird. He's president of the Client Solutions Group at Dell Technologies, responsible for Dell's commercial and consumer client portfolio, and that includes notebooks, workstations, desktops, tablets, software. He gets to see a lot. He joins us on the phone from Austin, Texas. Sam, nice to have you here. How are you?
Doing really well. Thanks for having me back, Carol.
Well, it's good to have you back. How have things evolved since we talked with you last in December, which was, again, another stressful time? We saw numbers, you know, we were, again, watching numbers go up in terms of the virus. Where are we today?
Yeah, since we talked, we talked about some of the demand we saw in the PC industry and the space that my business operates for Dell, and you know, we closed out the year as we thought with really strong demand, Carol. The industry had shipped 302 million units last year, which was a record in the past 6 years. And then, you know, since that point in time, we've seen really strong continued demand in my space. So just ended our first quarter, had 20% revenue growth in our business, a record for Q1, and continued strong profitability in the business.
What is it specifically? I love when we can drill down with someone like you. You know, is it notebooks? Is it desktops? Is it workstations? Is it PC? Like you and I have talked about the death of the PC for a long time. What is it though that really kind of ramped up?
Yeah, well, we saw, and you know, last time we talked a little bit about, we joked about the death of the PC, and then seeing the PC really become an important tool for people in the past year, critical whether you were doing work from home, learning from home, just trying to, you know, get a kind of escape valve and entertain yourself. It all now comes to us in our home on our PC. So it's a really important tool for people to have. Mm-hmm. It's a great friend. It's a great asset. And we've seen growth, Carol, in all different spaces. So we continue to see demand in the consumer space as people move to more of a one-to-one kind of computing model of I need when I'm at home, I need my PC to be able to do my stuff on my PC. We're seeing the commercial space grow. We're seeing notebooks grow. And then interestingly, in the last quarter or so, I would say we have seen a resurgence in demand around desktops. We've still seen a market that has shifted more to people wanting notebooks and mobile computing, but desktops that were shrinking a lot last year and mobile was hyper growing. We're now seeing growth in the desktop space as well.
So desktop, I'm assuming you mean like in the business commercial space, correct?
Yeah, we see it in the business commercial space. We also see it at home. Like people will use it at home for gaming or for maybe it's just a great system that I keep in one place and archive a lot of my data on.
Yeah, listen, I always thought, I remember growing up and I think getting like the first calculator. And it's like, that was a calculator for the family. You know what I mean? And it's just, we've really evolved to everybody has their phone, everybody has a laptop, everybody, or might also have a desktop. I mean, there really is this whole idea of this one-to-one computing model, you really do see it evolving, especially after a year like this past year.
Oh, I think that's exactly right, Carol. We joke and call it the, do anything from anywhere world. And the reality is to make that happen, and you can do that today, and people are doing that today. They will do that in the future. Technology plays a huge part in that. And whether it's a home and a one-to-one environment, or think about, businesses, and it used to be technology and PCs were like the domain of the IT department.
Right.
It's now everywhere in the company. It's, the technology you're putting in someone's hands. It matters when they decide to take the job. Line of business leaders in a company care about that technology because it helps their team be more productive, more innovative, do great things for their customers. So it really is that kind of world you described. It's changed from the one for a lot of people to everyone needs their own, and it needs to be a really great tool.
Hey, Sam, just got about 50 seconds or so left here. I hear a lot of optimism. What about the supply chain and being able to get the components, chips, and the like that you need to kind of keep this momentum going?
We definitely are working around getting those parts. We have a world-class supply chain, but when you look at the way the global economy has improved, Carol, and there's a greater demand for everything, including PCs. With the growth we expect this year, there's a shortage out there of semiconductors. So we are operating in that environment. We've operated with some shortages in our industry for the past 3 years and been successful. And we think we have a team and a forecast and an approach that'll get us, the parts that we need. But we're definitely in a challenged supply world.
Really quickly, 20 seconds here. Does the government need to play an active or more active role in helping out with that?
I think we have to get our forecasts right and go drive that. I do like the interest we have on building more infrastructure and investing in IT. I think that's a great thing for companies to be doing and for governments to be doing.
Always good to check in. Hey, Sam, take care. Have a good weekend. Sam Bird, president of the Client Solutions Group over at Dell Technologies, with us on the phone from Austin, Texas. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
My factory is a cage, life as a garment worker. That is just one of the sections in a new book out. It's called Unraveled, The Life and Death of a Garment. And it's by Maxine Beda, and she is going to take us through the life cycle of a pair of jeans, because the fashion industry, retail, when it comes to the impact on the environment, it's a big one. We'll get to her in just a moment. First up, though, let's get back to Charlie Pellet with a check on this day, Friday, wrapping up the trading week.
Indeed, turned out to be a winning week, 2 in a row. As a matter of fact, for the S&P 500 index, Carol Master, we've got the S&P this week up by 0.6%. End of the week just shy of a record pickup in hiring, bolstered confidence in the economy, a strong rise in hourly wages added to inflation worries. But what about the Federal Reserve? Ryan Dietrich is senior market strategist at LPL Financial. He was our guest today right here on the Bloomberg Business Week.
What has the Fed been telling us, right? The Fed said that inflation's transitory, but they're not going to start to do anything until we start to see the employment picture come back. And we're still about 8 million jobs away, I guess, from the peak pre-pandemic. So the truth of the matter is the economy is improving. Employment's not perfect, but the Fed is still a backstop.
As for that jobs report, employers did add 559,000 jobs in May. That was, however, below estimates. The S&P Dow end of the session just below records. S&P up 37, up 0.9%. 42.29, the record, by the way, 42.32 on the S&P. The Dow up 179 today, up 0.5%. Nasdaq up 200, up 1.5%. Nasdaq 100 index up 1.8%. 10-year yield 1.55%. Gold up 1.1%, 18.91 the ounce. And West Texas Intermediate crude up 0.8%, 69.39 per barrel of WTI. Facebook says former President Trump's account will be suspended for 2 years and will only be reinstated if conditions permit. Today, Facebook up by 1.3%. Square CEO Jack Dorsey says the digital payments company is considering building a Bitcoin hardware wallet, a device that holds the digital currency but is not connected to the internet. Today, we saw shares of Square up 1.1%, Bitcoin down today by 4.1%. And that's Bloomberg Business Flash.
All right, Charlie, thank you. So we've talked about this a lot on air, about the fashion and retail industry's impact on the environment. Well, a new book looks into this. It's entitled Unravel, the Life and Death of a Garment. And the author is Maxine Beda. She's founder and director of the think tank New Standard Institute. They describe themselves as a think and do tank, using data and the power of citizens to turn the fashion industry into a force for good. Prior to NSI, she co-founded and was the CEO of Zadie. That's a fashion brand and lifestyle destination. She joins us on the phone in Brooklyn. Maxine, so glad to have you here. It is a topic we talk a lot about. Tell us about your book.
Well, thank you so much for having me. The book charts the story of a pair of jeans, similar to the ones that I am wearing right now while speaking to you. It starts in a cotton field in West Texas. I think I just heard West Texas on the air. It travels to then China to see where that cotton is turned into a textile. Then it goes from China to Bangladesh, where that textile is cut and sewn into a garment, and then travels back to the United States to the distribution centers, the Amazon facilities, where I got the opportunity to speak to the workers there as well. And then I spoke to a lot of shoppers, understanding their relationship to clothing, why they're buying the clothes. And after this brief stop in a shopper's closet, the clothes are donated or are thrown out, and the book follows that along to Ghana, where the secondhand market of clothing is significant, and the landfills there where a lot of our clothing actually ends up.
God, where do we start?
Yeah.
A lot of it, it's interesting. I don't know how you feel, but the pandemic has made me kind of rethink a lot of things in my life, and that includes stuff. I grew up with a mom who was like, by quality, you don't need a lot of stuff. You just need good stuff, and be thoughtful. And we've really evolved into a consumption society where, and we talk a lot about fast fashion. You wear something, and if you only have it you wear it a couple times, it was inexpensive, you toss it out. What was the most disturbing thing or things that you found out in doing this book?
Yeah, I think it's really the speed, the accumulation, the scale of the industry, and where it's leaving workers, and workers not, workers and women in Bangladesh, and women make up a large percentage of the garment workers globally, and also the workers domestically. We tend not to think about Amazon as a fashion company, but it is the largest online apparel retailer in terms of number of shoppers. So, in the book, I got to go to China and see these rivers that are black. And then I went to Bangladesh, and the rivers became even more black. And every place I went, they said, like at every destination, then in Ghana at the end, which was, the most black rivers, you got to actually see, I was able to see the impact that our clothing has. And that's something that is such a huge shift from even a generation ago, because in the 1960s, 95% of clothing that Americans wore was American made.
Right.
Today, that's less than 2%. So we don't see the impact that our clothing has, but yet it's enormous.
And the rivers are black. I'm assuming it's runoff from the manufacturing and dyes or what have you?
Yes, exactly. So, in order, what I wanted to detail in the book is just how much goes into creating, the clothing that appears online or appears in, in the stores. And to create, to take this either cotton fiber or more likely polyester, which is a fossil fuel-based fiber. Sorry, go ahead.
No, well, hang on for a second, because I've got to do news, but it's so funny. You took me to where I wanted to go, because you write specifically about, we look at what's in our, the things we wear, the type of things, but, fossil fuels are in a lot of the clothes we wear because specifically of synthetic fibers, and we maybe don't think about that. Sit tight for a second. We're going to do some news, but we'll come back and continue. We're talking with Maxime Beda. She's founder and director of the think tank New Standard Institute. We are talking about her book, Unraveled, The Life and Death of a Garment, and she really just tracks from the beginning to the end and more what happens to a pair of jeans and she talks about starting from the cotton field. We just heard that, and then taking it to China and Bangladesh, and then kind of back to some landfills, if you will, in developing markets. We'll get back to her in just a moment. Right now, though, do want to get an update on world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is taking an optimistic view of today's jobs report, showing the U.S. economy created 559,000 jobs in May. That was below estimates, but better than April's numbers.
Unemployment filings are down. Hunger is down. And vaccinations are up. Jobs are up. Wages are up. Manufacturing is up. Growth is up. People gaining health care coverage is up. And small business confidence is up. America is finally on the move again.
Biden says no other major economy in the world is growing as fast as ours. Republicans, though, say the numbers fall short of expectations and are a sign that extended federal jobless benefits are preventing people from returning to work. The recent ransomware attacks on a gas pipeline and meatpacking company are posing new challenges for law enforcement. And FBI Director Christopher Wray says going after those responsible is a lot like fighting terrorists after 9/11.
In an interview with Dow Jones, Wray says the Bureau is actively investigating about 100 different types of ransomware, many of which trace back to Russia. He says each of those 100 pieces of software is responsible for multiple ransomware attacks in the U.S. Wray says there's a shared responsibility to confront the issue, not just across government agencies, but across the private sector and even the average American. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former President Donald Trump will remain suspended from Facebook's network works for at least 2 years. The world's largest social media company says Trump will be reinstated in 2023 only if the risk to public safety has subsided. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks, Nance. Well, our Business Week weekend show features an interview that we did with SoFi CEO Anthony Noto. SoFi, by the way, going public via SPAC this week, a SPAC backed by the venture capital investor and Pied Piper of the blank check world. We're talking about Chamath Palihapitiya. In this excerpt, Noto explains why the company decided to go public via a SPAC with him. Check it out.
We're approached by a number of different SPACs, and we were confident that we're ready to become a public company. We knew we would have to go through a pretty detailed, more detailed process from a diligence standpoint than going public because it's a merger. And we thought that Chamath's team brought first and foremost, a strategic perspective to the table for us, and that we could partner on different strategic opportunities over time. Number two, they had great experience in conducting the type of diligence of a company like us, as they've done with other companies, to make sure they brought the credibility to the PIPE investors when they made the announcement and brought us to PIPE investors. Three, they had great experience in executing SPACs, and so the combination of strategic value, the diligence process that we knew would bring incremental credibility to the PIPE investors, and then three, expertise in having done this before were the three factors on why we chose social capital. It was a tough decision. We brought three options to the board. It came down to the wire, and the board chose social capital.
All right, that was SoFi CEO Anthony Noto joining us this week, but also you can catch that interview on our Bloomberg Business Weekend show. Hear the entire interview on Bloomberg Radio and on our podcast feed at Bloomberg.com. His name, of course, familiar. He's the former COO and CFO over at Twitter, former Goldman Sachs partner overseeing technology and media. And so, of course, talking about SoFi and really getting into their platform and where they see the growth and the plans for the future. But really, this is one of those fintechs that's looking to disrupt the world there. So again, SoFi CEO Anthony Noto on our Bloomberg Business Weekend show. Again, catch it on Bloomberg Radio and at Bloomberg.com. You're listening to Bloomberg Business Week. We're going to get back to the author of Unravel, The Life and Death of a Garment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Chairman Gary Gensler has fired the U.S.'s top accounting regulator, a move that is certain to please investor advocates and progressives who have demanded an overhaul of the watchdog. Equities climbed to within a whisker of their record today after a pickup in hiring last month bolstered confidence in the economy, while a strong rise in hourly wages added to inflation worries. S&P up 37, very close to a record 42.29. The record, by the way, 42.32, up today by 0.9%. NASDAQ up 200 points, up 1.5% today. The NASDAQ 100 index up by 1.8%. The Dow up 179, up 0.5%. 10-year yield 1.55%. Gold up 1.1%, 18.91 the ounce. And West Texas Intermediate crude up 0.9%. 69.41 a barrel. I'm Charlie Pellet. This is Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. She is Maxine Beta, founder and director of the think tank New Standard Institute. She's got a new book out. It's called Unravel, The Life and Death of a Garment, really following the life cycle of a pair of jeans as it goes around the world, starting from raw cotton to ultimately when the garment is tossed away and ending up in landfills. Maxine, you know, sometimes we talk about the food industry. There's been books before over the past few decades that if you really knew what was in certain foods, you probably wouldn't eat it. And I do wonder how much of what we wear, if we really understood the process of it, ultimately ending up in our closet, how many of us would say, you know what, I don't want it?
Yeah, I think it definitely, going through this process has changed my relationship to clothing for sure. I see the work that goes into it. I see the resources and the environmental impact that it has. And so I've definitely changed the relationship to my own wardrobe. But it hasn't been one of, that I try to resist ever buying anything. It's actually been a very positive experience where I realize, I don't have to jump on that trend that's kind of being pushed on me. I can, really love my clothes. And so, that's a message that I'm trying to get across, is if we actually move to a relationship where we, deeply love our things, we will end up wearing them more. And that is actually the biggest driver of the reduction in resource use, is just increasing the use of our clothing.
I've got a teenager who definitely looks at kind of what a company stands for and their impact on the environment. And you're seeing increasingly, certainly, kind of startup companies and even some of the major companies really look at their impact at the environment and figuring out how to do it better. How hard is it, though, to do it better, to manufacture it, to reduce the impact on the environment? How difficult is it really?
Yeah, I think what we have to recognize is, as you were saying, it's the young generation that is really understanding, the environmental crisis in which we find ourselves in. And so they're the ones that are really pushing for this change. But we're at this place right now where the industry is responding with, quite a lot of marketing around sustainability, but we're not seeing a lot of disclosures. You talk about financial disclosures, but environmental disclosures that are clear, that are, apples to apples comparison. So it's very hard for consumers to be able to understand what is a company that is, doing real work and what is kind of greenwashing along the way.
Right. And we have this similar conversation when it comes to diversity and inclusion, right? There's a lot of conversations going on at once again, and it's, taking the words and turning them into action so that there are change. I guess my question is, though, can we easily, or can we make the necessary changes so that there aren't workers who are basically, kind of in a prison cell manufacturing the sweater that I'm wearing or the jeans that I'm wearing? Is there ways to do it so that the dyes aren't running off into the water in developing markets? Can we do it in an affordable way? Because I remember a conversation years ago with someone who said, listen, we can do it in a better way, but are you ready to pay $70 for that T-shirt? So can we do it? Can we do it, basically, is the question.
The simple answer is yes. It doesn't take new technology to improve the energy efficiency in mills and to switch over to alternative energies at the mills. And I talk about the mills because that's really the ground zero when we talk about energy, climate emissions, and chemical emissions is at that phase where you're turning the fiber into a textile. So it really, this is possible, and the researchers who are focused on ESG, who've been looking in terms of the labor side, have also said as well that it wouldn't mean a $70 t-shirt. In fact, it would be something like 15 additional cents. And that's even assuming that, yes, that the cost would be absorbed, by the consumer, not the company itself.
How do we move the mark? How do we do it? Or who has to do it within the industry?
Yeah, so that's the work that we're, focusing in on New Standard Institute now is we need to move to a place that is beyond this kind of marketing talk, beyond the talk. We need to have very clear disclosures around the total environmental impact, actual disclosures around wages, and that's the way that we can be able to kind of move from the race to the bottom to a race to the top. And so that's the kind of policy that we're pushing, trying to advance at NSI is a place that we can have a level playing field and make the progress we need to make in the time frame that we need to make it.
What is the time frame realistically that we can make these changes?
Well,
it's always the tough part, right? No, we find it with climate change, right? People put out goals and they're like, okay, we're going to be carbon neutral or have a zero carbon impact, but we're going to do it, 20 years from now. I mean, it's exactly. It seems like a long time because a lot of damage is done in the interim.
Exactly, and I think that even the bigger problem is that the executives who are, making those commitments are likely not going to be there at that time. So, that's why if we keep those targets but move to disclosures right now, we're creating the right incentives, within the C-suite to actually make the progress right now and not kick the can. And this isn't, as I said, it's rocket science. The people who are doing this work, it ends up a lot of it being cost saving because it's about energy efficiency. So this is very possible. It's about getting companies to work together on their facilities, but it is highly doable. We just have to create the will to make it happen.
Is there one company that you point out as saying, listen, this company has really been bad in terms of, fast fashion, if you will, or just, we want something, we get it quickly, and we think about consumption differently? Just got about 30, 40 seconds left.
Yeah, I think any of those companies, what their business model is getting us to something and wear it once. Yeah. And there's just, women, there are the surveys that are finding that women are seeing that their clothing feels old after wearing it only once. That type of business model that we need to kind of move away from.
Well, it's a great read, and it's on my summer reading list. I've gone through some of it, but I'm going to finish it up because the fashion industry is one we're talking a lot more about in terms of the impact it's had. Maxine, thank you so much. Maxine Beda, founder and director of the think tank New Standard Institute. Her book, it's called Unravel, The Life and Death of a Garment, The Life and Death of a Garment. Really fascinating, following a pair of jeans as it makes its way around the world. All right, that's going to do it for the Friday edition of Bloomberg Business Week, wrapping up the day, wrapping up the week. Our thanks to our Bloomberg Business Week team. We're talking about Reggie Bazil, Marufal Hussain, Charlie Vollmer, Tim Harrow, Ariel Agami, and Paul Brennan. If I'm leaving anybody out, am I leaving anybody out, guys? They said, Tim Stanovic. My God, my co-host. He gets enough credit. Have a great weekend. Check out our weekend show. We have a lot of interesting interviews. You heard some snippets. Anthony Noto, the head of the Beer Institute, and some great stories in the magazine. That double issue still on newsstands, online, and on the Bloomberg with the cover story on Kathy Wood and ARK Investment. I'll see you guys on Tuesday. Tim will be back on Monday. Have a great week and a safe weekend. This is Bloomberg.